And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. So many cross currents, so much that we can talk about. As usual today, we will begin by taking a look at the broader markets. You need to see where we are relative to resistance, support. We've seen a lot in the way of bumpiness, certainly since SVB Financial's collapse. So we will get into the markets and then look beyond the markets. We want to see where relative out or underperformance is taking place among those sectors and drill down even further beyond that. Again, all about preparing you for these markets and helping you have that foresight as we move into the rest of this month. We will also, I will share with you top headline news this week. And again, get further into really what's driving this current price action and what type of sector rotation is taking shape because of that. So some of the news last week, we did get a core CPI report, and this is a very critical report for the Federal Reserve. They use it to gauge inflation. Unfortunately, it did remain high. Inflation is still sticky. That was earlier in the week. And then also on the data front, we did see retail sales fell for the third out of the last 4 months. So we are seeing continued weakness there. Later in the week, consumer confidence came in quite weak as well. And I'll share with you the impact of some of that data. And then we did get another inflation report, that PPI number. Wholesale prices did drop. That was good news. It was led by a decline in food pricing. Eggs primarily, for those that are really into the details, but that was somewhat good news. However, the overriding news was not only SVB Financial's collapse from last Friday, but also Signature Bank, SBNY, and then Credit Suisse came forth with issues, as did First Republic. At the end of the day, those inflation numbers were pretty much thrown out the window as it relates to next week's ever critical FOMC meeting, where the Fed will be releasing their rate increase. The hike at this point is now at about 0.25%. It had been at 0.5%. So the overarching news certainly is the fragility within the banking community. So again, next week, that FOMC meeting is going to be really quite critical. So from here, let's go ahead and take a look at those broader markets. And here we are with a view of the S&P 500. The index was up a little more than 1% for the week, but you can see just how choppy it was. That initial CPI report in the beginning of the week pulled the markets back. And then beyond that, as a number of large banks pooled their funds and helped First Republic, we did see a renewal of the rally that took place late last month. Soon beyond that, other news did push the markets back. So quite a bit in the way of volatility. At the end of the day, we can see that RSI, that relative strength indicator, is in negative territory on this daily chart. And then also the stochastics are in negative territory. And equally, and maybe most important, is the fact that we did close back below key support at this 200-day simple moving average. At the end of the day, the S&P 500 is in a downtrend. Now, what I did want to share with you too is if we take a look at this price action this week, we did have pockets of strength for a 3-day period out of those 5. What I'm going to do is share with you right now an equal weighted view of the S&P. And as we progress through today's show, this will certainly make quite a bit more in the way of sense. So we're looking at a daily price chart of the S&P where each of the components are equal weighted as opposed to that heavier weighting that those mega cap FANG and other growth stocks have. And you can see you don't really have much in the way of a rally that's taking place. So overall, the broader markets, certainly this is really confirming that downtrend, but highlighting the fact that there were pockets of strength and areas that did buck the downtrend taking place elsewhere. And certainly one area is the Nasdaq. Here we are with the daily price chart of the Nasdaq, and it was up 4.1% this week. And we can also see with the Nasdaq and using these simple moving averages that we did resume the uptrend that took place in January into the very beginning part of February. And that is by way of the index breaking back above each of these moving averages. Nice high volume characteristics here as well. And we can see that on the momentum side, your RSI up here in positive territory, trending higher, and the stochastics also in positive territory. So it's really a market of the haves and have-nots, where the mega cap growth names are really helping support the Nasdaq and other areas as well, which I'll share with you as we move forward, because as always, I want to share with you what's taking place here among the 11 sectors in the S&P 500. And what we have here is a 2-month daily price chart view. And each of these sectors are sorted by strength up in this upper left quartile to weakness down in that lower quartile. And if you watch my show weekly, you'll know it's all about capturing, getting in front of potential rotation. It's not going to be a whippy move. It's going to be a very slow progression, but certainly one of the faster moves was this swift deterioration. And really banking and financials had already been in a downtrend, but just an awful lot of damage as it relates to that financial group. We'll take a look at that bank group next in the next segment, but let's key in and zero in on where the real strength is. It is technology. This is XLK, the technology sector, up 5.3%. A couple of things of note here with XLK, and this will shape up as we look at other sectors, is the fact that technology held in relatively well during the deterioration among other areas of the market. Other note here with XLK is the fact that Microsoft and Apple combined comprise about 42% of this index. So you can keep that in the back of your mind. There are other reasons that tech really held in and performed well also that we will get into, but certainly by far and away the strongest area. And I will tell you, it's an area that you can actually play, particularly for those of you that are more nimble in the markets. It's something that I've been talking about with my MEM Edge report for some time now. We've stayed with a number. I don't have a lot of suggested holdings buy list ideas, but those that are on there, particularly within tech, have really held in well and are outperforming. Let's take a look at the XLC, Communication Services Select Sector Fund, and we can see that it has also reversed its downtrend. Of note here is the fact that Google and Netflix are also in that 40% range as it relates to a weighting. And in particular, we did see Google up almost 12%. And that is going to be part of the reason, but there are other areas that are really experiencing some vibrancy among the XLC sector. So as we move forward, utilities up here in the forefront, they did gain 3.4% for the week. However, the strength is there, but we do have a lot in the way of upside potential, resistance taking shape. I will share with you a name or two in this sector because we are seeing among these utilities a bit of a flight to safety and then also a flight to higher yields. As we move forward, I'll share with you interest rates really fell quite a bit last week. And let's take a look at some of these other sectors up here. Consumer staples, that's another defensive area that is up here in the forefront. It was last week as well. So down here in this lower quartile, let's take a look. Basic materials, XLB, total deterioration, and then also energy. And what's taking place here, this is XLE, is with the banking collapse of several names, and then also the really outright fragility, there is a fear of recession that has come back to the forefront, and you will see materials, energy, commodity related stocks be most negatively impacted, and also a reduction in interest rates as well. So let's go ahead and move on. We can from here go ahead and take a look at some of the other sub-industry groups. I use ETFs that are super powerful as far as helping stay on top of the markets. Again, that 2-month daily view and strength to weakness. And let's take a look. Gold stocks up 6% for the week. And this is all about flight to quality. There is a lot in the way of fear that's underlying in the markets, given what's taking place with the banks, and also the fact that the Fed is potentially going to be pulling back the reins on their rate hike cycle or campaign in the face of this fragility. They don't want to push any more banks over. And really, we can see this up here with gold up in an uptrend. Also, volatility is still elevated. It did bounce around quite a bit. We closed here at 25.5. This is a daily price chart of the VIX. And importantly is the fact that it remains above that 200-day simple moving average, but overall elevated. You want that volatility in that 16 to 18 range to provide you with that calm kind of a backdrop to know that the markets are okay. But again, this is not unusual given the backdrop in the markets. From here, let's go ahead and take a look at some of these other subsectors and industry groups. And I did want to share with you that the yield on the 10-year Treasury fell about 10% last week. And you can see we're now down at about 3.4. Not that long ago, we were approaching and dipped above that 4% critical level. So this is another indication of flight to quality as individuals are purchasing Treasury bonds, so that it's certainly a bit safer than other areas of the market. So also, I did mention to you the fact that retail has been under pressure, and it was before certainly the broader market's deterioration. Here's XRT, retail ETF, and it continues to stumble down another 4.2% this week, in the face of those retail sales numbers and consumer confidence, and then also very mixed earnings reports from some of those bigger box stores about 3 or 4 weeks ago. Also, let's just take a quick look here at KRE. This is that regional banking ETF. There are some out there that are trying to catch a bid on the bottom. I would stay away. It is very dicey. It's very rumor and headline news driven. And there are certainly other areas, particularly if you are looking to benefit from the stronger areas that we've highlighted. Now, I can see that I don't have it, so I am going to share with you 2 sub-industry groups in technology that have re-entered an uptrend. First up here is semiconductors, SOXX. The group is up almost 5% for the week, and a nice orderly pullback. This is one of those subgroupings I talked about with my MEM Edge report, staying very on top of the fact that semis really stayed in quite well, and they are performing well. We can see this MACD crossover just taking shape as semiconductors turned bullish. One other sub-industry group that is also back in positive territory, software names. IGV is this ticker symbol for the software ETF. And I did want to share with you that the grouping software stocks have about 350 names in there, unlike semiconductors that are about 100. The bigger point here is if you drill down and look at the names that are up here above their moving averages, similar to this ETF, they are going to be companies that have reported strong earnings here recently. So of note. So from here, let's go ahead and take a look at some other areas here, because what I did want to share with you is the fact that despite a rather shaky or volatile background, we are still seeing a lot of items or a lot of market dynamics that take shape during a normally more bullish period continue to take shape. And by that, I mean companies that reported earnings and came in above estimates fared well, as for instance, Lennar, LEN. We can see the stock forming a nice right side of this base here, and that MACD just now getting into positive territory. They came in ahead of estimates. Other dynamics as well. I did not mention this, but last week, housing starts rose 10% for the month of February. So continued vibrancy here. We can take a look at another housing stock in that same group that is from my work, the strongest. This is NVR, had a nice base breakout here, super high volume. Again, that MACD crossover indicating a new uptrend here. So really, you wouldn't know what's taking shape elsewhere in the markets. A couple of other companies that reported earnings last week, a bit of a smaller one. This is Academy Sports ASO, came in above estimates, gapped up into a base breakout, nice high volume, and then nice momentum shift there. A heavier weight name that came out after the close yesterday. This is Federal Express, FedEx, and we can see not only did the company come in above estimates, management also guided growth higher for the rest of this year, and investors liked what they heard. Big gap up almost 8%, very big volume, pushing this momentum into positive territory. And then one last name that we can take a look at on that earnings side, there were other names, but I'm sharing with you the more impactful, and that is Adobe Systems. And this is a software company, ADBE. You can see that gap up and then a continuation rally so that the stock is now above each of these moving averages. We're not quite in positive territory yet, but certainly promising and again indicative of what you would normally see in a more broadly positive market environment. Another phenomenon that took place last week that is also seen in more normalized periods of the market was the fact that analyst upgrades had a big impact on stocks. But you will note that the names that I'm sharing with you on that upgrade side are technology. Here we are with Intel, INTC. Take a look at this big rally this week, and you can see that the momentum is shifting into positive territory. This, of course, is your next big potential barrier to the upside, but nice high volume on the rally. Another analyst upgrade that drove a stock out of a base is AMD, Advanced Micro. And these are, of course, are both semiconductor stocks, but we can see this really sharp base breakout to new highs, high volume, and then positive momentum shift here as well. One last name on that upgrade side was a semi, but not quite ready for prime time. This is Qualcomm, and we can see that the stock has not been participating with the rally taking place elsewhere in semiconductors. So for that alone, it's not a stock that would be attractive to me, but it certainly is worth noting that that analyst upgrade pushed the stock into what could develop into a downtrend reversal. And we are poised to have that MACD black line coming up through the red with the RSI poised to turn positive. So let's move on from here, because I talked earlier about the concept of some of these more defensive areas, names that provide high dividends, but also are in sectors that are viewed as defensive. And first up here is Southern Corp. This is a utility stock, and they are very much in the forefront of using alternative energy, highly regarded firm. I can pull up, let's see if a weekly will do the trick. Yes. So back in 2019, I recall this rally quite well. This was among two select stocks in that utility space that really powered higher, all about their forwardness as it relates to using alternative energy. A little bit of a different look now. At this point, we aren't quite in positive territory, but it did have an excellent rally. Momentum is in positive territory. If we can just get up above that 200-day, that would be certainly a little bit more interesting. Another dividend stock that actually, and I didn't mention it, yields 4%, so nice high yield. You can get that information by going on StockCharts.com, ask for that full quote, go ahead and update the chart, and it will list that yield up there at the upper right-hand side. Another name that we can look at in the consumer staples area, this is Parfums. It's IPAR, and you can see these rallies, basing rally, another base, and can only anticipate a potential higher move. 1.8% yielder and a big grower. And then another area that is in that consumer staples is good old Clorox. And the company really fared well during the beginning stages of the pandemic and lockdown period. Here we are everyone had to have, of course, Clorox and some way of getting rid of germs, and we can see this big move. Now, what happened subsequent to that is the fact that the company had explosive earnings, and it's only now that it is finally overcoming, and it has very much easier by way of comparison on those year-over-year quarterly earnings. So here's a gap up on earnings, the beginning of February, and the stock really marking time since then. Nice 3.1% yielder. We can take a look also at good old Hershey, which was also a big winner, but stays really quite strong in this current market as well. HSY is the ticker symbol, 1.7%. They did come out with earnings here during this high volume period. Management guided growth higher, and it remains in a nice uptrend. So really all about, for those that want to buffer their portfolio with names that are more in the way of defensive, but also the names I've shared with you have growth prospects as well. So from here, I did want to move on and share with you some of these gold stocks. And there are many that believe that we are still early in the advance. So first up here is GLD, and we can see the extensive move that that ETF had this week. I pointed that out to you earlier with these gaps up into a nice uptrend. From here, I am going to go ahead and add a 5-day simple moving average, and that can be really quite helpful when these stocks really get going. And we can see the momentum here with that RSI up there in positive territory. But of interest to me is the fact that down at that bottom, the MACD is just entering into positive territory. So we can see that from that perspective, that we are potentially earlier in a possible upside advance. So from here, I'll share with you a couple of other stocks that caught my eye when screening for these gold names. We can also take a look at GFI, and that is Gold Fields. And it is a little bit earlier in its advance and a little bit closer to that 5-day simple moving average. The momentum also just now dipping into positive territory despite this significant move with positive RSI as well. So very interesting looking. Also, we did put that yield up. GFI has a nice 3% yield, little bonus there. And then also we can take a look at AU. These are names that I recall looking at and have not in some time, but they definitely bear a close look now. This is Anglo Gold, and very similar dynamics here with these names where they are experiencing these pretty sharp gaps up, nice rallies, and the momentum just entering into positive territory on this daily price chart. And from here, it can oftentimes be quite helpful to use historical precedents when you see that MACD and that momentum shift into higher gear. This is taking us back to last November. You had that nice rally, and as long as your momentum remains, in this case, the RSI up above this 50 level, the stock can be held as it continues to trade higher. Your big signal for an exit is going to be multifaceted when that RSI trends into below that 50, when the stock breaks below these moving averages on big volume, and you get that MACD crossover. So until then, this name and certainly other in the gold space can be held. Let's take a look. I was going to share with you Newmont Gold, and you can see another one that is not quite ready for prime time. We are just now breaking above. Not sure if we did close above that 50-day or not. We just barely did, but we can also see that MACD, while it had a crossover, it is still below zero, but we do have that nice positive RSI momentum taking place there. From here, I'm going to share with you a couple of software names for those of you that, again, are nimble and are interested in being certainly informed of those names that are holding in well. And there is a theme. First up is Palo Alto, PANW. And I talked about that theme being the fact that the company experienced and reported very strong earnings. So the stock had a gap up late February on strong earnings. You can see the nice high volume. And since then, really has been marking time pretty much digesting that gap up, but also holding in well, certainly relative to the broader markets. This company is software security. There still continues to be quite a bit in the way of networks being broken into. So their software is very highly needed. OKTA is another one. The company also reported earnings back here, gapped up into an uptrend and is holding in quite well. This is another software security stock. And I will share with you again on that full quote. You can simply get an update and it will tell you their software that it is in that particular group. So from here, I can share with you just a couple of other companies that are holding in well, but also thematic. And that is Workday, WDAY, and a number of these software stocks that are really beneficial to companies by way of taking care of their back office work, helping streamline the certainly the systems that they have in place. Those are the companies that are not only holding in well, but they are outperforming, WDAY being one of the names. You can see this black line up through the red here with positive momentum. And then another company that is in the same space, and that is ServiceNow. Not quite as pretty, but certainly we can see that it has broken back above these shorter term moving averages, momentum dipping into positive territory. So I'm all about looking for themes within these bigger, broader sectors, simply because there are going to be underlying dynamics that are going to drive many names in that space higher. And again, in this case, either software security or those that assist with back office activities. So that's it for this week, everyone. I want to say goodbye from sunny Southern California, and I look forward to seeing you here again next Friday afternoon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.